We know traps exist in the market. They happen all the time, and they're part of the market. It's a great thing, when we're on the right side of it, but boy, does it hurt when you're on the wrong end of it. Hey there, John Henry here, SSFTG. Welcome to the video. If this is your first time here, welcome, my friend. I hope to earn your like and subscription today. I talk about traps on a minute-by-minute basis some days. They're all over the place. But just so that we're clear on what I'm referring to when I say trap, because a trap definitely needs a definition. A trap is a liquidity sinkhole that sucks traders into the wrong direction at the perfectly wrong time and allowed them nothing to gain from it. Not even a scalper's target. Nothing. Okay, that's a trap. Effectively, if you were to put it in very simple terms, if we had a bull bar and your entry point was one tick above that bull bar, the next candle would look like this. That's what I mean by trap. It was the perfectly wrong spot. The right time for it, but the perfectly wrong direction. It suckered them in the wrong area, and it became a liquidity sinkhole. All the buyers who were trying to buy up here were handing their contracts over to a larger player or players. The key here is that they gained nothing, not even a scalp target. This definition is incredibly important to understand. Buying where support was assumed, but nobody showed up. Continuation buyers that are buying the dip on a pullback, only to find out that it wasn't a pullback. Those are the kinds of scenarios that trap people. Traps can happen in just one tick. Right? We've seen that before, where it goes one tick above a high and then goes screaming the other direction. They can also happen over several candles, over several days, developing a squeeze and trapping tons of traders in the wrong way that spans several traps, all culminating to one big one. It's easy to see what the wrong way was in hindsight, but seeing it in real time is a totally different ballgame. In order to see it in real time, we need to understand that the market price and location has basic targeting at all times. Essentially, if we're at a bullish target, stop buying so hard, right? It's probably going to pull back because the bulls are going to be taking their targets. It's really that simple on the surface. If you're at a measured move objective, maybe don't buy directly into that. If it breaks beyond a target area, keep going because it's probably going to push to the next zone. These areas of interest are almost always where the majority of the worst traps take place, the ones that really rip your face off. Of course, by worst, I mean tasty and delicious if you're on the right side of it, because I love traps. Now, I could talk theory till I'm blue in the face, but the best way to understand them is to see them and rip them apart. So let's take a look at a couple examples here. First off, when we're looking at this kind of move, it's not hard to see who got screwed, right? I mean, it's pretty obvious that the buyers were the ones that were trying to buy the dip, and it didn't work in their favor at all. They didn't even get new highs. That's a good sign, because remember, we need to see the bulls not winning anything. And more importantly, we see a lot of that failure taking place over here. So if we hone in on that area specifically, and we look at what took place, this will give us an idea of how a market will operate in terms of a trap. Now, we know that a lot of this was taking place while the bulls were trying to get this going to the upside. But realistically, every time they tried to get a rally back up, it was having a hard time making new highs. It was struggling, right? It was really having a tough time. But what ended up happening on the majority of those highs? Right? Well, it went up, got the buyers in, right at the top of the range, beautiful bull bar, just to reverse back down. Another beautiful bull bar right at the top of the range, trap. Bull bar at the top of the range, trap. Bull bar at the top of the range, bull bar at the top of the range. You get the idea here. They all became trap zones. Now, when we zoom out a little bit, it's pretty obvious to see why. The market's losing a lot of steam here, and the bulls aren't winning any fights. If they were trying to gain support, they've already broken through a lot of that. So chances are sellers are looking for a continuation phase. At the very least, if sellers are looking for a continuation, we know that the last move was an L5, so the next drive up to an L2 is where you would expect to see resistance. And wouldn't you know it, the majority of all of those bull traps happen directly into that short spot. This is why I call them liquidity sinkholes. Sellers know that buyers are buying there. JP and the crew and Goldman Sachs and all of those folks that have infinite zeros in their bank accounts, they have the ability to sell a vast amount of contracts. But to do that, it takes somebody on the other side of the trade too. You got to sell it to somebody. You got to buy it from somebody. So we have to wait for those traders to feel like they have an edge. They try buying up for maybe a higher low or maybe a double bottom. But the sellers had other plans in mind. It became a liquidity sinkhole that Goldman and the crew sold to and slammed the floor right back down again. One of the big keys here, you'll notice on that last one, it's all about completionary targets. Where is the market supposed to go under normal circumstances? It bounced off an L5, probably going to come back to an L2. That's exactly where we start seeing all the traps form. Right, you kind of get the idea here. I use traps on a daily basis for nearly every fundamental trading decision I make. I'm not joking when I say that either. They place a ludicrously large role in my trading, and they're important to understand at their core, not only what they are, but how they form and where they form and why. I hope this helps you understand them a bit better. If you have any questions, thoughts, ideas, or anything else in between, feel free to drop them in the comments below. I always love hearing from you all. Have an amazing day, and thanks for watching. Bye.